That's a good call, because even right now, it's just vibrating every 5 seconds. And it kind of muddles up the other interactions that you're having with people. Like I've been tweeting about Apple, getting excited.
But that's how they gift you the fucking dopamine they get you with sending that shit, and then you're hooked on the app all day.
At first, it's cool, but then after a while, you're like, this is just annoying all day. Anyway, KRIS was not around yesterday, so we got to get him. The floor is yours, brother.
Yeah, so KRIS, here's the question to take it off. C3 AI, I think, explains the momentum for the day, up 35%. This is a company up 300% in the past month. Their earnings have been horrible over the past couple of quarters. They have earnings tomorrow. So the question is, do you think the momentum that's kind of allocated to a lot of these AI plays and seeping over from things like Nvidia is justified? Do you think it can last? And kind of where do you see the market heading over the next week as a result of all this momentum?
You know, I honestly can't tell. It's really going to be dependent on C3 AI's management to kind of shepherd along the story as far along as they can take it without seeming untrustworthy, only because the numbers don't necessarily justify the value that they've gotten over the last like 3 months, which is kind of crazy. Like literally they're trading on the name AI. So I think I know this is stupid, but a lot of people there's like, oh, I want to buy into AI. So let me just buy a stock called AI. And I don't know, maybe that's some of it.
That's exactly what's happening. That's literally.
No, I don't.
What was that
know.
stock in 2020? That stock in 2020 that ARK was pushing and people bought the wrong stock. Do you remember that? It was a medical company or something like that, I believe.
Someone in the chat, if you know this one.
If you know what I'm talking about, and that stock jumped like 2,000% in like a day. And it was because people were typing in the name of the company and not the ticker. Anyway, it was Zoom. Yeah, it was Zoom. Right.
So the thing is, when I look at this company, I'm seeing this massive run up in the stock, but I don't see the numbers that justify it. Maybe I'm missing something. I did a fair amount of due diligence. I know about Baker Hughes being a large portion of their revenue. They have contracts with the Air Force, all that good stuff.
When did you do this due diligence, by the way? Over the past couple of weeks?
No. I did it like 6 months ago, man. And I've been keeping my eye on this company. I mean, you know, when Tom Siebel's involved, you know, with Siebel Systems, these are CEOs who've proven their mantle in the past. So you kind of want to give them a little bit more credibility than that a lot of people wouldn't give them. So I didn't just look at these companies like, oh, this is some kind of fraud that, you know, people need to just ignore, because there might be a story behind it that we don't necessarily know about. I know some of one of our friends is actually somewhat bullish on C3, but I also know that he's smart in that he will keep stop losses.
There's a fuck ton of puts that are protecting that position.
Yeah. So
he actually told me the amount of money he's up today. And he told me it's a lot, but he knows that it's kind of unwarranted. So he has puts and protect himself.
Yeah. And that's the key with investing, right? Like you can love this, you can love the company and hate the stock, you know, and then you have the opposite effect as well, you know, so which is you hate the company, but you love the stock, right? So it's like, these are the catch-22s that people have to like really do your own like research on. I know a lot of people are, you know, right now caught up in the AI craze, and which is good. I mean, I am always trying to feel out, okay, which companies are actually doing AI versus which companies are, you know, saying they do AI, and then which ones are ultimately going to benefit from AI and which ones are not. Like, I try to find the companies that are hidden in the rough, right? Like, not like, you know, when it comes to zero to one, right? In 0 to 1, they like Peter Thiel, says it right there. Like, you want to invest in the companies that say they're not a monopoly, but they're actually a monopoly.
Yep.
You want to avoid the ones that say that, oh, we're going to take it all, but you know, they're not really that competitive. So that's what's leading me into the AI craze right now. So I'm being very selective on which companies I believe will ultimately benefit from AI. And
you do believe it is a craze that the market is consolidating to get exposure, but it's leading to some unwarranted premiums on companies that are just unwarranted because they might not be able to deliver. Is basically what you're saying.
Well, I would say they're just setting expectations a little too high. You know, a lot of companies, they're good companies. They are doing well and they're doing AI like they're supposed to. It's just when you have unwarranted expectations, that's bad. Like Nvidia right now, Nvidia is doing everything right when it comes to AI, but is the stock price warranted? Like, I don't know. I honestly, I can't say yes or no to that question.
Their guidance is no joke. The guidance that they had above what's expected. So
yeah, but Carlos, here's the question that I would phrase to you: is the guidance for Q2, ultimately the guidance that they're going to be giving for the next 5 years? Or are we just seeing this short-term bump in everyone rushing through the door to get into the AI craze? And then the minute like that craze is over, everyone is going to be dumping or not buying the product. Like here's an example: when Bitcoin and all the crypto stuff was around, everyone was like, oh my God, we need to buy, we need to buy, we need to get in, buy more GPUs, buy more GPUs. And then once crypto fell off a favor, everyone was just like, hey, we got all these GPUs now. And so you can see that whole thing happen, especially with a company like Nvidia. Like, remember Nvidia? It went all the way to 341 during the crypto craze. And then what happened? Because demand dried off and died off, boom, it went back down to almost 100 something, right? The question at this point is, how much further can AI drive Nvidia higher? And the honest answer that I'm coming up with is, I have no clue. But I don't know where the top is. So if I don't know where the top is, I'm not going to try to touch it. On the other hand,
but built into Nvidia's business is a bit of a planned obsolescence. Like, you know, the 2080 Ti was the hot shit until the 3080 Ti, and so it's an arms race, right? And so I hear what you're saying, and it's true. But most of the time, the markets only care about the next couple of quarters. Like, long-term investors are different, right? But most of the time, the market only cares about the next quarter or two.
Yeah, and see, I think
go ahead, Chris. One point, then I got to share something. Go ahead.
Yeah, I just think that's I think that's the key right there. If you're a long-term investor, is it worth paying $400 a share for Nvidia at its current PE?
No,
What is it like? You know, that's the question. You know, so if you're a long-term investor, this is not what you want to see. Like, you don't want to see the company that you are wanting to see, that nice secular long-tailed growth, jump up in a short period of time. Like, that's like your minute. That's like your signal to say, hey, let's take a step back. Let's kind of reevaluate.
So so this raw question for you, then I want to play this video on Nvidia that I think is really good. You are saying you would rather have 100% gain in 7 months versus 1 month and feel less compelled to sell because you think it's more warranted. Versus,
can I guess what you'd say? I think Chris would take that gain if it happened in a month and sell 75%.
Yeah. Yeah, absolutely. I think
keep the 25 just in case. You know.
So is there no time where it's warranted for it to go up that much in a month, or you think any 100% months are just insane for most companies? Like, it's just not natural.
Unless sorry, go ahead.
I was going to say, aside from like a short squeeze, or.
So yeah, a short squeeze would be one of them, but more importantly, if there was a secular event that happened that caused that whole thing to happen, like, let's say right now the earnings that were reported were just crazy earnings that were reported, right? Like, Nvidia had a pretty okay quarter. They didn't have a great quarter, by the way. Their guidance was really high, but their numbers were okay, right? Other companies that also were overlooked, but then all of a sudden are now like performing like gangbusters, like Tesla did, and then they had like a secular tailwind of an entire industry behind them. That's a whole thing too, you know. So yeah, I guess you have to be very like selective on like the S curve scenario, but I'm not a big believer in S curves, by the way. Like, I think maybe 1 out of every 1,000 companies actually have an S curve, and I think most companies, like the other 999 that are successful, have like this nice steady like diagonal move higher.
Here's what happens to most of them.
But
it depends. S curves I think apply specifically to adaptation or disruption of other technologies, right?
Correct.
So
or like external factors like solar, right? That could create
exactly. That's not that doesn't mean that every company grows on an S curve, but it means disruptive companies that are, say, they're trying to get penetration or steal market share from something else. They do tend to grow that way.
And that's the thing, though. When companies end up like getting the reputation of being a company that's a disruptive company, sometimes premiums can get way out of hand. I mean, it happened to Tesla. Tesla retraced all the way back from $1 trillion market cap to $100. It happened to Enphase, where everyone was a big believer in Enphase. It went from 350 down to 150, right? So I think what it is people. I do believe that disruptive companies do exist and S curves do happen, but what typically happens is a lot of investors, they pile on towards the end and take it much further than it's supposed to go, and then you have a retracement down again, and then like I said, you have an opportunity to buy. Like, I'm seriously looking at Enphase as a buyer right now, even though that's something that I wouldn't have considered about 2 years ago. Why? Because I actually do believe that they have a disruptive product that can take on a lot of the challenges that we're seeing in the energy space, you know, when it comes to like electrification of the grid and X, Y, and Z. So it's just one of those things that I'd rather wait for a pullback a little bit.
So let's
you know,
let's take a look at this. This is Nvidia. I think this is a really good clip. I saw this today. This is a guy who bought Nvidia in 2015. He's talking about why he sold 25%. He's actually going to speak to the logic and psychology of buying and selling, and also to Nvidia in and of itself. He actually does some really good technical analysis as well.
Use this gain to take some profits of some degree. You've sold a quarter of your position, is what you told our producers. Is that correct?
Yeah, this morning it gapped higher, and I took the opportunity to just take something off the table because, man, this is one for the ages. And I didn't want to sit here in a reversal and not have done something.
Refresh, our memories, if you could, on how long you've owned this stock. And do you remember when you first bought it and what the first price you paid for it was?
I don't remember the exact price, but it's like I bought it in the summer of 2015. And I remember coming on the show, we were in New Jersey, and said something to the effect, Netflix was struggling at that time. And I said, maybe we ought to replace the N with Nvidia. And, I've believed in the stock ever since then. And it's thousands of percentage points, obviously. I read this weekend that Nvidia over the last 10 years prior to my getting involved was the #1 performing stock, up 10,000%. So this is like just you could live your whole life and never see a stock do what Nvidia has just done ever again. And we may not. So it's been a historic run. But I want to talk about some of the shorter term dynamics here.
So that was the thing I wanted to share, right? I mean, this is a once in a lifetime thing. He took 25% off. He looks sad that he sold 25%, but even he goes on to say the RSI is 86. The last time it got that high of an RSI, there's a massive drawdown. So he's been through this 3 times. He hasn't sold, but he's seen the pullbacks. And as you're saying, Chris, sometimes there's a massive premium, especially when that RSI gets a little bit too high. And he took 25% off the table off a company he's up thousands of percents in terms of return. Carlos, you're muted.
10,000% is no joke. That's insane.
That's insane. That's insane.
Every dollar you spend, you get 10,000. Are you kidding me?
That is insane. By the way, before we get back into the podcast, for the first time in I think a week, 24 minutes and 11 seconds, we have hit 5 hundo. Shout out to 500 people here. Thank you for being here. Thank you for being here.
And we're back under 400 now.
We're at 518. So Carlos, let's get your thoughts on Nvidia. You agree with Chris? It's a bit pricey right now.
Yeah, I think it's a pendulum. Momentum matters, right? It's like people running through the door to get in or people rushing through the door to get out. Like this is why when we talk about technical analysis, it is important to look at these things. It's important to look at RSI. It's important to look at these things. And if I was in Nvidia, I used to have a position in Nvidia, but if I was in Nvidia, I just don't know anyone that wouldn't be taking some profits right now. 25% seems to make sense because you're up so much. There's no way that he's not covering his initial investment. Then you can just chill.
Yeah, and if you're a long-term believer in the company, when it's down, you can buy in again. It's not like the other thing to also remember is that by holding on to eke out an additional gain where you think it is, let's say, okay, let's take a step back and let's assume, okay, Nvidia is going to run further up. How much further up do you think it's going to run? Right. So every higher movement up is going to bring a lot more drag with it. Like there's going to be a lot at this point. You're just chasing. You're chasing to see that you're chasing the top, and you don't want to do that. Right.
The redlining. It's like revving the engine. You're redlining. You're in there. You're pushing it.
Yeah. And so the thing with me is that if I trim right now, I could, like I said, once things become a little bit more normal, the market wakes up to the reality of things, I can buy in again, and I'll be okay with that. And that is the bet that I'm making. Okay. For you guys, for other people, they want to hold long term for the next 20, 30 years. They believe Jensen, and this is going to be a next, like the most valuable company on the planet. God, dude, all for you. Hope that happens. I wish I could join you on that journey, and maybe one day I will, but I'm going to wait for a pullback. When it comes back down, I know the story behind it. I know the theories behind it, and that's when I'm probably going to end up buying. And I also think that there are other companies right now that haven't necessarily gotten the boost yet like SoFi, because I've been buying a
It's
shit ton of
crazy, dude. It's crazy you said that. I was about to be like, yo, sorry to channel surf.
Let's
but
transition to that. Yeah.
SoFi and specifically you emit with Palantir. You're now like, you're not, Palantir has made you whole now, right?
Basically, yeah. Basically.
All right. So how do you feel about the run up? It was over 50%.
Well, look, I feel the same with KRIS. I think Palantir is technically overvalued because of the growth rate at 18% guidance. It can't be the market cap it is with that guidance. If management is sandbagging and Q3, Q4 is 30, 40% guidance and the growth rate averages to 25, 30%, it might be a little undervalued, especially if the market's willing to give an AI premium. The thing is, we don't know if this is going to happen. And so for me, I don't want to touch this till 2030. And so I'm leaving it there and it'll ride. If it goes back down to 10, I'll buy something.
Yeah, you're not taking, okay, number one, you're not taking anything off the top, and you don't think that this is institution sort of laying some sort of foundation?
It might be, but I personally cannot time it as well. Definitely not as well as someone like KRIS, who is way more experienced in understanding pullbacks. And so for me to come back in and get, like, I can't do that, right? And
Would you buy some puts to protect the gains that you have right now at the 15?
No, because I don't have any gains. My average is 15, so it's barely right.
But then you've actually lost money, because how long have you locked up this capital?
It's been a while. It's been a year and a half,
right?
And I agree with that. But look, I'll keep DCAing. I mean, my philosophy is very simple with Palantir. I will keep DCAing because I want it for the next 10 years, and that's it.
Do you have a dollar amount that you want invested? Are you looking at a profit point?
I would like to get to 5,000 shares.
5,000 shares. Okay, yeah. I like to do share count. So what do you do, KRIS, to decide what your allocation is in the company? Do you decide the profit that you want based on what you think the target price would be, or do you think about share count?
To be honest with you, I try to look at companies that grow in excess of 5% of my portfolio. The minute they start doing that, then I really reevaluate the thesis, right? It's like, if I allocate maybe like 2.5%, 3%, and then it jumps up, like, let's say Palantir, to like 5%, I ask myself, whoa, wait a second, this just kind of went up really fast. Like, what happened to it? And then the questions start, like, okay, is it justified? Is it not? Do I sell some of it and do I come back on a little bit later? Like, I have triggers for each stock that I have. And then there's other companies that I am overtly bullish on, like I said, like TFC and SoFi, which I think are going to be really good companies to be in for the next like couple of years. They're very undervalued. The sector itself is undervalued. They have a lot of catalysts coming on their way. So you've got two different things happening. You've got mean reversion for TFC, and for SoFi, you've got catalysts that are coming along, like the student loan repayment schedule coming back. Like mortgages.
It's also a good level market cap and stock price wise to